Welcome to my channel. Please like, comment, and subscribe. Today we are going to talk about hypothecation in car insurance and how to remove it. Today, buying a car is very much within the reach of salaried class and professionals. Easy availability of loans and higher disposable income are two major factors that have made cars affordable. A buyer paying the full showroom price at the time of car purchase is a rarity. More often than not, buying make only a small down payment and the balance cost is met through a bank loan. The concept of hypothecation status comes up in case a loan is taken to purchase the car. Hypothecation, what does it mean? What does it mean? To understand what hypothecation is, you need to grasp the fact that it arises only if you have taken a loan to buy your car. Say, you are buying a car and to finance it to have approached the bank for a car loan. The bank sanctioned the loan for purchase the car. Though you get it over ownership, the car would remain a collateral to the bank which has lent you the money. In other words, hypothecation in car insurance implies pledging the car when applying for a car loan. While you will have its physical possession, the bank will continue to hold hypothecation status on your vehicle until the loan is paid in full. Hypothecation and insurance. The Motor Vehicle Act of 1988 mandates buying a car insurance policy for every car that you purchase. It is compulsory to buy at least a third-party liability insurance policy for every car you own. With respect to hypothecation status in insurance policies, when you apply for an insurance policy for the car that is financed through a loan, your policy document will carry a note of it. This note will imply that while the car is registered under your name in your jurisdiction RTO, the hypothecation is car insurance is made in the bank favor. Legal compliance in hypothecation. The registration certificate issued by the Regional Transport Office or RTO of your jurisdiction would contain information about the hypothecation status of your vehicle as well while registering your car, which is hypothecated by the bank. The following set of documents will be required for submission. Original registration certificate, existing car insurance policy papers, PUC or pollution under control certificate, your address proof, which can be your either car, ration card, electricity bill, and etc., an attested copy of your PAN card. A receipt the fee paid for the endorsement of the hypothecation status by the Regional Transport Office or RTO. Removal of hypothecation. It is only natural that once this loan has been paid off in full, the hypothecation status is in insurance will cease to exist. To know how to remove hypothecation is extremely important because of ownership complexities, extra scrutiny when applying for renewal of insurance policies. Issues while trying to sell off the car. Issues when claiming insurance due to natural or man-made disasters. And this is the process of hypothecation removal. These following points will help you to know how to remove hypothecation. First, the first and foremost requirement in removal of the hypothecation status is paying off the loan. Only when your car is debt-free, you can apply for the removal of hypothecation in car insurance. Second, to validate that you have repaid your car loan is full, you must obtain a no objection certificate from your bank. You must also obtain from identify from your bank, which will serve as a hypothecation cancellation request from to the RTO. Third, submitted an NOC to your RTO for initiating the process of cancellation of hypothecation of your vehicle. Number 4, you will be required to pay a certain stipulated fee for this cancellation process that must be submitted to the RTO. This fee will vary between stages. Once you have paid the fee, the LCO will review your documents and complete the cancellation. Welcome to my channel. Please like, comment, and subscribe. What is moving insurance? Moving insurance covers losses or damage to your possession during a move. Because moving puts your possession at risk of damage and theft, a moving insurance policy can help reimburse you for any mishap during the moving process. Since there are many different ways to move, there are also various coverage types available to protect your belongings. Types of moving insurance if you hire movers. If you decide to hire movers, they are generally responsible for the items you have them transport. However, if you are moving to a different state, moving companies are required by federal law to offer two types of coverage. The type you select will determine the reimbursement you will receive if any of your items are lost or damaged. Full value protection. With full value protection, your mover is liable for the total replacement value of your lost or damaged possession in your shipment. If some of your possessions are damaged, destroyed, or lost during the move, your mover has the option to either repair the item, replace it, or offer a cash settlement for the cost of the repair or the current replacement value of the item. Generally, this type of coverage is more comprehensive but most expensive. The cost of full value protection coverage can vary by the mover, so depending on the deductible you select, the prices can fluctuate. The next is release value protection. This coverage is offered at no additional cost, but provides only minimal protection. With release value protection, you will receive up to 60 cents per pound for item. Therefore, if your 5-pound computer is valued as 600 US dollar, you would only receive like 3 US dollar if your item is lost or damaged. Like 60 cents 50 pounds times. Spared liable coverage. This is the next coverage. Some movers also offer spared liability coverage through a third-party insurance company for an additional charge, while your mover is still responsible for the release value protection, which covers only up to 60 cents per pound. This additional insurance policy will cover the rest of the loss up to the policy limits. If you decide to purchase the extra moving insurance through the movers or from a third-party provider, make sure you get the coverage details in writing and understand what cover and excludes. The next is how much does moving insurance cost? The cost of moving insurance will depend on factors such as the value of your possessions and the type of coverage you select. If you choose basic coverage or release value protection from your mover, it is typically free with your moving agreement. If you select full value protection moving insurance, you can expect to pay about 1% of the total estimate of the value of your personal belongings. The cost of moving insurance from a third-party insurer may be between 1% and 5% of your valuation estimate. Therefore, if we use the estimate above, the cost will be between 180 US dollar and 900 US dollar for coverage. Do you need moving insurance? Depending on the value of your belonging and how far you're moving, a moving insurance policy might be worth considering. For example, suppose you are moving from Florida to Ohio during hurricane season. In that case, the chances of weather condition damaging your possession are more likely. A moving insurance policy may give you peace of mind. On the other hand, if you are moving down the street, you may not be as concerned. I think that's all my explanation about a moving insurance. I hope it can give you sight about this insurance, this kind of insurance, because it's so rare video or article to talk about this kind of insurance, like a moving insurance. I hope it can help you. Thank you so much for watching. Don't forget to give like, comment, and subscribe.